Well, the June quarter wage price index came out at the same time this morning as the minutes of the Reserve Bank's August board meeting, and both supported the prospect of no more rate hikes. Annual wages growth slowed from 3.7 to 3.6%, and the minutes said information about inflation was reassuring. The wages data would have reassured them some more, I think. Surprisingly, the Aussie dollar didn't fall with that double reassurance, but it had gone up above 65 US cents beforehand, and then it stayed there. In other monetary policy news, the People's Bank of China has announced a rate cut to try to kickstart the Chinese economy. Now, it's not expected to be the last, and as a result, the Chinese currency has been quite weak, but not as weak as the Russian ruble this year, as the war and the sanctions finally catch up with its economy. But guess what? If you take it from the invasion of Ukraine on February the 24th last year, both the Russian ruble and the Chinese yuan have fallen by exactly the same percentage against the US dollar, 13%. They've just taken very different roads to get there. And speaking of China, it's just become the world's largest ship owner, overtaking Greece. Share market closed 0.4% higher, with big gains by the two most expensive stocks, CSL and Cochlear, and smaller ones by miners, retailers and banks. The US market rose 0.6% last night, as did Tokyo today. And finally, iron ore fell below $100 US a tonne for the first time since May. And that's finance.